Hello everyone and welcome to our Q2 edition of our Professional Risks Power Panel. This time the group is going to zoom in on all things AI and its impact on D&O and E&O. Joining us this time we have Larry Fine, Management Liability Coverage Leader, Phoenix North America at Willis. Jacqueline Morters, Managing Director and Practice Leader, Financial Services Group, Legal and Claims Commercial Risk Solutions at Aon. Brian Lorenz, Management Liability Practice Account Director and National E&O Practice Leader at Risk Strategies. So welcome everyone, and today we're going to be focused, as I mentioned at the top, very much on AI. So how is the increased use of AI tools in professional services, for example, law, accounting, consulting, changing the nature of D&O and E&O exposures? Jacqueline, I'll start with you.
Thank you, Paul. Yeah, I think, AI is relatively new in terms of how it's being viewed by the general public. So it's exciting. It has a lot of possibilities. And that said, I don't know that it's changing what is happening in the product space in terms of the D&O and the E&O kind of coverage, because those are broad-based coverages and they're meant to encompass a lot of evolving operations. So there's still going to be coverage for securities claims, though the basis for that claim, the underlying facts may change. It may include things about AI, and it may include things about the company's business and how they reported what their prospects are and how they're going to use AI and how it's going to change their world. Those things may come up, but I think it's really you're going to see a development of the claims, but the basic kind of coverage is still there. And if you extrapolate that to the professional lines, the E&O side, I think you're going to see a little bit more interest in the more specific areas about how a law firm, how a consulting firm, how a tech firm uses AI and how they put it out to their companies and how that might affect what their E&O coverage looks like, though it's still broad-based and it's meant to provide coverage for their services and what they do. You may just have some more interesting underlying fact patterns, underlying cases that give rise to the claims that come up in this space. But I think really the broad umbrella of the coverages are going to be generally the same. There may be some bells and whistles added, but it's going to still serve the need that it has.
And it's such a new area, of course, Larry, that maybe perhaps some companies don't really understand what they're doing with it.
Yeah, well, I think it's important that companies have some idea what they're doing with AI themselves, both internally and outward facing to their customers and clients. And they also need to be able to explain that to various stakeholders, including their insurers who are asking more questions. They also need to be concerned about vendors and service providers that they hire, that they're secure and that there's not hallucination or data poisoning or other dangers coming from their vendors and the use of vendor information. So there's a lot to be concerned about and try to stay on top of.
You say that this is a lower exposure, Brian?
Yeah, most definitely. I think it's important, to answer this question is that, professional services firms, let's face it, mostly are always private. There's obviously some big public ones, but for the most part, they're going to be private. And that means the D&O exposure is going to be lower overall as is without even talking about AI. But then we have to kind of dissect their exposures. I think in the long run, AI will definitely make a better risk for all companies, specifically professional services. But that also I think is more important when we talk about E&O. E&O is going to be their largest exposures when we're talking about law firms, accounting, consultants. The E&O is going to be kind of the line of coverage that we'll see most impacted from AI tools. And I could give examples from like a law firm. We've seen the calendar systems change over decades. How it used to be 30 years ago to 20 years ago to 10, and that the implementation of technology and now AI's that, and overall it's made for a better risk. I think there's going to be some growing pains with AI in the short run, but eventually in the long run, it's just going to make a better risk and better kind of lower the exposures for professional services firms.
I'd love to know how the insurers are reacting as well. Larry, are you starting to see any exclusions or perhaps limited levels of coverage for AI-related errors or decisions made with AI assistance?
We're really not seeing AI specific exclusions so far on D&O policies, at least. But there are certain existing exclusions that can catch AI related claims the same as the claims that aren't AI related. So, certain things like on a public company form, a lot of the litigation we're seeing involving AI are not securities claims, so it may not attract cover if it's just an entity being sued on public company form. On a private company form, there's broad entity coverage, but there are exclusions that are common that could limit the coverage, such as bodily injury or unfair trade type exclusions. So they're just there, and they could be applicable, but there's no specific AI exclusions that we're seeing yet. But we're definitely on the lookout for them. We know that that could come.
Okay, so it's a no, it's a no from Larry in terms of AI specific coverages. Then, Brian, is that something that you agree with?
Absolutely. Yeah, a no from me as well. I, you know, I mean, in our conversations with the carriers and underwriters, nothing specific has come down the pike yet. Some of them are talking about it, but maybe applying some sublimits down the line, depending how the exposure shakes out. Because let's keep in mind, this is all very new, and it changes so rapidly as we talk about it. And I have not seen anything from the carriers that have come across so far. Now, I think we have to wait to see how the claims evolve and kind of start shaking out on the D&O side. I think we're really probably has more of an impact on coverages changing up to address AI is probably on the cyber policies right now, but nothing on the D&O side.
Okay, are we going to make it 3 from 3, Jacqueline? No exclusions so far?
We are. So I agree with Larry and Brian. I think the carriers have to be, mindful and careful because you can't just say we exclude AI because it's in everything. So how is that coming up and surfacing in a claim situation? So I think there needs to be some thought put into if there is going to be something that's walled off and either pushed to a specific coverage or sublimited or excluded altogether because the underwriters just can't get their arms around it. That's why they exclude things because they can't get their arms around what the pricing and the value should be. So I think if they can find that space and something that they really do not feel that they want to be underwriting to, they can wall it off and do that. But I think at this point, the technology is too new. We haven't seen enough claims come through that really demonstrate how that might apply. So I think for the near future, aside from some maybe very specific instances, we're probably not going to see anything until things develop and inform the markets where maybe they want to place their risk.
Okay, so in terms of exclusions, it's a no, but I'll vary the question up a little bit. Have you seen changes in D&O or E&O policy wordings, perhaps, to address AI-generated content, decisions, or advice? And indeed, is there any concern in the industry about coverage gaps or liability arising from AI systems that act autonomously or unpredictably? What do you think, Brian?
Yeah, still going to be a no. Kind of like the previous question, but haven't seen anything. I think the underwriting is being sharpened up a little bit to pay attention to the disclosures that a company faces, and I think historically we've seen kind of the new shiny object in different types of D&O concerns, whether it be COVID or now the tariffs, what that's going to do. I think with AI, is there going to be more specific underwriting questions or concerns that will surface just to address that and kind of kick it around a little bit more from an underwriting side. But right now we have not seen any exclusionary language or any new policy language added, at least from my end and what I've seen at this point. And again, this is moving pretty fast, so we'll see what happens next week.
All right. Well, of course, it seems like it's pretty much business as usual based on the answers that I've been given so far. But Larry, are there perhaps any AI-specific coverages that are emerging?
Yeah. So although I think there are likely not any major gaps in the the regular policies, especially D&O and some other policies, because no one's actually going to be suing AI as a defendant. They're going to sue the company or the individuals who put the AI in place. But notwithstanding that, there's a little underlying unease from some clients as to whether they're definitely covered for all AI stuff. I think some D&O carriers are starting to add endorsements with buzzwords like hallucination and data poisoning and stuff. But there are also some carriers that are starting to offer AI specific coverage. And one carrier in particular has 3 different policies, one of which is a primary AI policy, broad AI policy with a duty to defend, one of which is a first party policy for if you have damages caused by a vendor AI issue, and then the other one being a umbrella excess DIC type policy, which I think could be pretty appealing, in that there are certain things like bodily injury and other things that are excluded by many policies that would theoretically be picked up by this DIC type policy. And most of these policies have express coverage for things like the EU fines, which can be pretty large, for the new AI laws out in the EU. So that alone may make it worthwhile. But so I read a surprising statistic, far in the future, but Deloitte has predicted that AI-focused insurance products will generate premiums of 4.7 billion, but by 2032. So we'll see.
All right. Sounds like there's a lot of room for expansion there. And Jacqueline, what does all of this mean for cyber-related policies as well?
And Larry just kind of alluded to this, and product expansion, right? Cyber didn't exist, remember, a number of years ago. It's a newer product that evolved to meet a risk, and when underwriters and markets are able to underwrite to the risk and price it and sell it at scale, then you have a market for it and you have an industry. And I think that's what that number is speaking to. And right now, the technology is still very new. So while there might be some niche products that are kind of being developed and tested, and we'll see how those respond to claim situations. That's really where the proof is. Can they respond, and can they respond adequately so that a company feels they got value for what they paid for their premium? Right now, I think, Brian, you kind of alluded to this. A lot of this is on the underwriting of current programs and looking, would we add something or change an existing program a little bit, or just get more in the weeds as to what the specific company is doing and how the risk is being priced and evaluated. I think over time, they're going to be able to find it. And Brian is right. On the cyber, there's probably more opportunity there in the near future to make some differentiation and have some products that are appealing and have some of the things that maybe don't have a home yet in traditional insurance find a way into coverage. Again, the underwriters will have to be willing to evaluate it, price the risk, and there's going to be some testing when claims happen that either are covered or not, or something surprising happens in how the wording gets interpreted. That will, the carriers will assess and adjust accordingly, and then perhaps Deloitte is right, and you have your market by 2032.
Well, Jacqueline, while I've got you, have there been any notable claims or disputes involving AI-driven issues that have perhaps triggered or tested D&O or E&O coverage?
At the moment, we are seeing an uptick in things that are identified as AI or AI related. I think there's been an increase in the securities claims, for example. We used to have the greenwashing term. Now we have AI washing as a term, and that's being identified by some plaintiffs in something that was wrong in the disclosures in the K's and Q's, and that led to a traditional securities claim. There's not really a coverage issue per se in that sense, because it's still a securities claim. It's just that the underlying event or the underlying technology happens to involve AI. But more of those are happening, and I think plaintiffs' firms are looking at those things as facts that they can use to support their claims. The SEC, I think, has also become more interested, and probably other regulators too, but more interested and involved in either a company or an individual, a founder's representations about what this technology can do and how this company is going to succeed based on the technology, and whether that becomes true or not in the near or short term. They're looking at those things, and there's been some, matters and some investigations on that. So I think those things are starting to grow, and the litigation will follow the technology. The technology moves very fast. The litigation will follow a little bit more slowly, but I think it will start to sort out and inform, and you will probably see more of it, and into the professional side, the E&O side and the tech E&O side, you're going to see that in terms of their product offerings. That's probably, more direct and easy for people to comprehend, is that something went wrong with a product or service that was trying to be sold that is really AI focused. And so we'll probably be seeing more of those things as well.
Okay, and Larry, is there anything that you think could perhaps lead to disputes down the line?
So I'm not really aware of coverage disputes right now involving AI. But so the AI watching, securities class actions, right? There have been quite a few. I think they've mostly been covered. They're counted in different ways by different experts, I guess. So, but I read that there were 15 AI specific 10b5s in 2024. Out of 42 that have been filed altogether since 2020. That was Wilmer Hale, but I think there are other counts available that might be different, because there's a question of what is an AI claim. But I do think if there haven't been already, there may be disputes relating to the fact that the FTC has been very active in also looking at what they think may be misleading claims about AI and the abilities of a company or a vendor with AI. If you go on the FTC official website, it's really a lot of it now is about AI and actions they're taking on AI. So since the FTC enforcement actions may not be considered securities claims, so that may affect if there's coverage on a public company form, and on a private company form, there may be unfair trade and other types of exclusions that could apply probably to the company, not individuals. So but I don't think the FTC has been going after individuals so much. So there's definitely room for some disputes to arise.
And Brian, have you seen a lot of claims in recent years?
No, but I mean, we definitely are seeing, some of these AI related securities litigation kind of creep their way into things. As Larry kind of pointed out already, I think in the last 4-year period from, I was reading from the Stanford Securities Clearinghouse that they've counted about 34 AI related securities claims. 9 of those were just last year. I also would like to add too, I think, the FTC was on a tear in the previous administration. That's definitely taken a few steps back under the current administration. So I also wonder if that's going to slow down at all. Just in terms of their activity and how they're going to progress and their aggressiveness to file actions on a regulatory side of things.
Well, what's clear from the conversation so far is that there's a lot of perhaps still to come elements to AI in terms of D&O and E&O. So how do you see evolving regulations around AI transparency and accountability influencing D&O or E&O considerations going forward, Larry?
Yeah, I think Brian made a good point about changing administrations, and that I just mentioned the FTC has been very active, but with the new administration that might change, because as you may know, the prior administration had an executive order called Safe, Secure, and Trustworthy AI, and the new administration issued an executive order that seemed to pretty much supersede that, called Removing Barriers to American Leadership in AI. So it may be felt that the active SEC and FTC may be creating some barriers to American leadership, so that could change. But so although there's really not regulation on a federal level, companies do have to be concerned about the EU regulations if they're multinationals, and then many states have laws. Obviously, California has a lot of different AI-related laws already, but Colorado, Virginia, New York, several states do have specific AI regulations. Several of them are relating to employment and using AI in employment. So companies do just have to be aware of the different regulatory environments, as Jackie mentioned, which may actually just completely conflict. So you have to keep abreast of all of that.
And to further Larry's point there, Brian, there's bound to be more questions asked. So are there a lot of new risks to consider here?
Yeah, I mean, absolutely. I think, as Larry mentioned, we're going to see more states adopt laws. And, and also from a federal standpoint, I think things will always kind of continue to progress as this exposure continues to progress and as AI continues to progress. And that's, of course, going to present new risks corporately for D&O insurance considerations. And I think, we'll see how things play out. But I definitely think that, we're going to see more laws put on the books, and that's going to lead to an increased regulatory environment. And then we'll see if carriers will, come back and maybe put some sublimits on policies for the time being, and see kind of where the overall policy language goes.
Okay, so watch this space seems to be the overall message, Jacqueline, because everything ultimately is still new here.
Yeah, I mean, it's a new technology. The regulators in the federal government, in the states, and overseas are all like struggling with to how to regulate it appropriately, allow it to be used, but put some safeguards around it. And so I think what a company and their underwriters for the various lines of insurance have to do is really delve into what are they facing? Where do these companies operate? Remember, we're not in physical geography anymore when we're talking about this space. So maybe they're based in Europe, but they sell here. So how is the company addressing those regulation schemes and their potential liability and exposure? And then the underwriters is going to have to be knowledgeable enough to ask the questions about conflicting, regulatory schemes and how a company will address that and how they want to underwrite that risk going forward, and whether there is going to be or is not going to be coverage for certain aspects of something that happens in a regulatory sense, either whether it's a fine or a penalty, some other kind of damage, whatever they work out, and how those things are handled and how they proceed in their administrations.
Excellent thoughts and another great panel. No doubt we will talk AI again many times in the future. So I will look forward to our Q3 meeting. Until then, of course, keep it right here at Insurance Business TV.